Hi friends, Gensol Engineering Limited is in news for various reasons such as promoters share reduction, share market manipulation, fund diversion, etc. Recently, SEBI has given interim order barring the promoters accessing the stock market along with other matters such as compulsory audit of forensic audit of the books of accounts, etc. So in this video, I just want to cover uh, what is the content in SEBI's interim order and what is the that is order is a long one. I just want to divide into two. One regarding the diversion of funds, and second, which is to be covered in next video. So let's start now. So sorry, yeah. So background, I just want to, I hope you all know that this Gensol Engineering Limited is a solar consulting service, engineering, procurement, EPC contractors, leasing of electric vehicles, etc. Actually, their largest branch business is in the EPC business, also in the business of electric vehicle leasing. Electric vehicle leasing are mostly done to a group company, Blue Smart, and they have many government contracts also. This company was incorporated in 2012 and is listed in BSE SME platform in 2019 and got listed on the main board of BSE and SME NSE on July 3, 2023. Before going on the case, I just want to show the financials. If you see the figures, numbers in the company, that the top line has grown from 61 CR in 2017 to 1152, 1152 CR in 2024. Trailing 12 month sales is around 1297 CR. If you see the operating profit, that has grown from 2 CR in 2017 to 209 CR in 2024. Net profit is also say growth from 2 CR in 2017 to 280 CR in 2024. So if you see the financials, top line profit, everything has grown. If you see the balance sheet size has increased from 10 CR in 2017 to around 2,202 CR in September 2024. So the balance sheet size has increased. In that also, equity contribution is around 640 crores and borrowings around 1,045 CR, which is good balance sheet per se. That component is higher in this case, but still is fine. Here, if you notice one thing, shareholding has changed a lot. Shareholding pattern has changed a lot. During the time entity was listed in SME platform in 2020, promoter shareholding was around 70%, and there are totally 155 shareholders. And by 2025, the number of shareholders has increased to 1,09,872, with promoters share has reduced to around 35%. We see the promoter shareholding consists of Gensol Ventures Private Limited around 11.94%. Anmol Singh Jaggi, Puneet Singh Jaggi having shareholding around 12% and 10%, and their mother contribute around 1.15%. So that's one thing to note, that the shareholding of the promoters have reduced. We see the share price, because this company was listed in initially in SME platform, later moved to the normal platform and listed under BSE and SME, BSE and NSE. If you see the company's share price in one point touched as high as 1,126 per share, with market capitalization of around 4,300 CR. But as on April 2025, 25th April 2025, share price has gone to 90 per share, with just a market capitalization of around 343 crores. See the decrease in price, decrease in market capitalization. It is so alarming. Why there is sudden decrease in market price of share? There are so many triggers. Major trigger I felt was the credit rating, downgrading of credit rating by various credit rate agencies that we'll cover in the later slides. So in 2024 June, SEBI has got a complaint that there is manipulation of share price and diversion of fund from this Gensol Engineering Limited. They started examining the matter from there, but the real trigger that came is the red flag by credit rating agencies. On March 3, 2025 and March 4, 2025, Care Rating and ICRA has downgraded their credit rating of their various fund and non-fund based limit to D, which is very low credit rating to be given. And that is one of the major concern, the major issue that is found that resulted in stock share price going down. Rating agencies on unmasking the trouble. They are the first who found the issues, major issues. ICRA has told that whatever documents they have shared with them is false. Is falsified documents that they have shared. And Gensol investors, after this credit rating agency rating report, they have issued a statement that there is no falsification of documents. SEBI, seeing the credit rating, asked more information from these credit rating agencies. Credit rating agencies have given some what you call, they have told as per submission, or credit rating agencies have told that there is what you call documents given by them is false. There is downgrade because there is repayment delay or repayment failure to various financial institutions, for which Gensol have told that there is no issues in debt servicing except in one of the group company, Blue Smart. And so there is no issues in the repayment capacity of the borrowing entity. CRA was further submitted certain documents. Actually, what happened, I will tell. Credit rating agencies asked for repayment schedules, bank statements of all the loans. The entity didn't provide, the entity provided all the statements except for Indian Renewable Energy Development Agency and Power Finance Corporation cost statements. Reason, they are the largest lenders in this case, and they didn't provide the statement. Instead, what they did is they given a conduct letter perpetually provided by these two entities that the repayment wasn't, the account content is good. They are regular in debt servicing. This statement was given by the entity telling that this statement was provided by IREDA and PFC, telling that the account content is good. This credit rating agency didn't go purely based on the statement. They directly contacted these two entities, get a statement from them. Also, one more event that has happened is Care Rating was given a statement from Gensol telling that they got an NOC from all the lenders of Gensol, which also seems to be not true. So what this credit rating agency did is they collected bank statement directly from the lenders and found that they have found that there is some issues in the what you call account conduct, as they have made delays in repayment. So yeah, so the credit rating agency approached IREDA and PFC and check whether they what a conduct letter provided by them, whether they have actually provided the conduct letter. They found that these conduct letters are not provided by them. These are all fabricated. So these are the conduct letters as provided by IREDA. As this I got it from SEBI websites. As per this, if you see, it is like a genuine conduct letter which says that the account conduct is fine. There is regular repayment of term loan. Similarly, Power Finance Corporation, this is the conduct letter given by Power Finance Corporation, has claimed by Gensol. Here also it is showing that they are what you call very good in account credit. They are paying everything on time, like that the statement is given. But the credit rating agency, when they inquired directly with PFI and other lenders, they found that there is some issues in the account conduct. So SEBI subsequently called for detailed information from IREDA and PFC uh, for this account conduct details. On reviewing the information submitted for the government for this from this lenders, multiple instances of default was found. So that is an allowing case. So here, this is a list of delays that is being reported by IREDA and PFC. So if you see, IREDA is delayed in December 2024, January 2025, February 2025. Similarly, PFC has also made such delays. PFC payment to PFC also there are some delays. So that is a concern thing. Actually, as per an entity, if it is listed in stock exchange, and if that entity is not able to pay the dues or defaulted in servicing any loan, whether it is in any facilities, they should report within 30 days to by way of filing to the SEBI that they have made default. But interestingly, in December, January, February, this entity has told SEBI that there is no default in any loans. So first instance of default was reported in December 31, 2024. Company, however, continued to submit statement to credit rating agencies certifying that there is no delay or default in servicing any loans. The same statement they provided in December, January, February. And they also didn't violated the SEBI Master Circular, which says that if any default is there for beyond 30 days, they should report to SEBI such default. That also is not complied. So from 2022 to 2024, IREDA and PFC has given multiple loans, mostly for procurement of electric vehicle as well as for carrying out EPC works. Loans are given by these two entities. Now let's look at how these funds are being utilized. So it is noted that out of 977.75 CR availed by company from IRED and PFC, 663.89 CR was for purchasing 6,400 electric vehicles. As per submission made by Gensol, these electric vehicles were procured were to be subsequently leased out to Blue Smart, a related party entity. So this they are going to purchase 6,400 electric vehicles and that is proposed to be given to Blue Smart as a lease agreement. So for that purpose, they have taken this loan. As a submission made by Gensol, EVs are procured by the company and subsequently leased out to Blue Smart related entity. But if you see, actually, they are going to purchase this vehicles from an entity called Go Auto Private Limited. So what has actually happened? Let's see. Records show that the company received loans aggregating 663 CR for the purpose stated from IRDA and PFC. Gensol has to provide contribution of around 20%. Total loan amount is around 829 CR for purchase of this much vehicles. Based on these figures, an amount of 262 CR remained unaccounted. How this remain unaccounted? How they have diverted this fund? This is one of the interesting thing what they did that we'll cover in the next slides. So, end user funds. So, bank statement both the company and the dealer order was examined by the SEBI and found that there are so many issues in this. Like they have diverted the fund to multiple group entities for real estate purchase. Many issues are found in the statements. We'll go in that in detail. So first we'll go with the loan provided by IREDA. IREDA has dispersed 71.39 CR on September 2022. And they, as per the terms and condition, promoter also has to contribute around 20%. It is more than 20%, around 26.06 CR. Promoters contribute to the fund and they park this amount in a separate account. From this account, around 93.88 CR was transferred to Go Auto Private Limited, from where the electric car is to be purchased. Up to this, there is an issue. They have taken loan, promoters have contributed their part and transferred to a dealer of electric vehicle. Up to this, it's all good. Go Auto Private Limited, dealer of electric car, instead of giving the electric cars to them, they had a different, they did something else. They transferred around 50 CR to a company called Cambridge Ventures LLP. Cambridge Ventures LLP is a group company. It's an enterprise significantly influenced by Anmol Singh Jaggi and Puneet Singh Jaggi. This happened on the same day of fund transfer to Go Auto Private Limited. And Cambridge Ventures LLP, what they did is they transferred around 42.94 CR to DLF Limited. DLF Limited is not at all related to electric cars. This isn't real estate business. DLF isn't a real estate business. On further investigation, it is found that this fund transfer to DLF is for purchase of high-end apartment. The Camellias name an apartment they are purchasing. Initially, this Camellia's apartment was registered in the name of Mother Jasminder Kaur, mother of promoter Jasminder Kaur, and Jasminder Kaur has paid around 5 CR. Where this 5 CR they got, that is another story which I will cover later. Anyway, initially 5 CR was paid by Jasminder Kaur to DLF, and further around 42 CR, 40.94 CR was paid by Cambridge Ventures LLP using the funds taken by IREDA, taken from IREDA for purchase of electric cars. So there is a clear diversion of funds. IREDA was unable to monitor because they found that the amount is being transferred to Go Auto Private Limited, which is an auto dealer. And Go Auto Private Limited instead they use this fund. They transfer the fund to another group entity called Cambridge Ventures LLP, and that was later transferred to DLF Limited for an unrelated purpose. It can be noted from the above that funds available by Gensol as loan for procuring EVs were through multiple layer transaction utilized for buying a high-end apartment in the Camellias DLF Gorgon in the name of firm where MD of Gensol and brother are designated partners. So here it is clear that instead of buying electric cars, these funds are utilized for an unrelated purpose. Technically, this is a public limited entity. A public limited entity has taken a loan from a financial institution, and that fund was used for an unrelated purpose by transferring the fund to a group company where it is a private limited company owned by MD main promoters, and this fund was used for purchase of a real estate asset, purely unrelated business. To separately note that around 5 CR, which I told you initially, which is paid by mother, which is initially paid as booking advance by Jasminder Kaur, mother of Anmol Singh Jaggi, was also sourced from Gensol. Further, it was noted that once DLF returned the advance of Jasminder Singh, so once advance was paid, this advance was repaid by DLF to Jasminder Kaur. She didn't give it back to Gensol. Instead, she transferred this money to another group company called Matrix Gas and Renewables Limited. So this is a chart. This chart I got it from SEBI order only. So Gensol has transferred money to Anmol Veldre, another group company, Veldre to Anmol Jaggi to Jasminder Kaur. Jasminder Kaur has transferred the money to DLF Limited. DLF Limited repaid the advance paid. That is transferred to Jasminder Kaur. Jasminder Kaur transferred to Anmol Jaggi. Again transferred to Veldre. Again transferred to a different company called Matrix Gas. So there is a clear diversion of this 5 CR also. So, bank statement of Cambridge Ventures LLP further showed that it received around 70 CR from Go Auto. 50 CR, as I told, for this DLF transaction, and the 20 CR on December 13, 2020, which prima facie appears to be diverted from the funds transferred to Go Auto from the proceeds of loan amounting to 71 CR. Technically, the loan, so much amount is being used for an unrelated purpose. Cambridge repaid 47.5 CR to Go Auto later on 31st March 2023. But if you see the trace, if you go how they got this fund, this also the funds was funded by OD account of Paramcare Private Limited. That is also a group company. And that Paramcare Private Limited got taken this fund from an overdraft account, which was taken overdraft account was created based upon FD of 50 CR subscribed by Blue Smart Mobility. So technically, Blue Smart has an FD of 50 CR. That FD was given as collateral to take an OD. With it, from that OD, they have taken the money and given to Go Auto. So there are so many transactions like this in this company. Now I'm covering another loan taken from IREDA around 43.69 CR. That is also for the purpose of purchase of 400 electric car from same entity Go Auto Private Limited. So this is the balance sheet. This is the item in balance sheet. If you see, Indian loan is taken from Indian Renewable Energy Development Agency Limited. Rupee loan amount is 43 crores 69 lakh, and that is for purpose of purchase of 400 EV cars. Funds are to be used for purchase of electric vehicles, but the loan amount along with promoter's contribution was initially given to Go Auto Private Limited, which in turn this amount was given to Veldre Solar Industry Private Limited, another group company. So if you see this transaction, first the loan was taken, along with promoter's contribution was given to Go Auto Private Limited. Go Auto Private Limited transferred the money to Veldre Solar Industry Private Limited. Veldre Solar Private Limited, this entity, what they did, they transferred some money to one group company called Matrix Gas and Renewable Energy Limited, around 5.6 CR. Another group company means to the same entity, Gensol India Limited, 20.5 CR. That they have used for their operational purpose instead of the end use, which is for purchase of electric cars. Around 3.9 CR to Presinto Technologies Private Limited, another group company, and around 50 lakhs they transfer to Sharekhan Limited. Sharekhan Limited is not a group company; it is a broker. It is a share broker. Why they transfer to Sharekhan Limited is another story which I will cover in different presentation. Technically, they have transferred this money to Sharekhan Limited for doing multiple share market manipulations, which SEBI has found that I will cover in a different presentation. So, technically, the loan amount was diverted for multiple group companies and also to some money to self entity also, that is Gensol Engineering Limited. It was not at all used, means majority of fund was not at all used for the end use which is proposed to be used. That is for purchase of electric cars. There is another loan taken from Power Finance Corporation around 117 CR. This is the balance sheet breakup. It is for purchase of around 1,000 electric cars. Power Finance Corporation disposed around 117.47 CR. Promoters contribution around 29.37 CR. Transferred to a separate account, and that amount is transferred to Go Auto account. Same dealer, same auto dealer. Go Auto Private Limited, instead of giving electric cars, they have transferred the money to Gensol Consultant Private Limited on 46.64 CR, and some fund to Cambridge Ventures LLP, that is another group company. And this Cambridge Ventures LLP transferred the money to Gensol Ventures Private Limited. From above, this prima facie observed that 96.69 CR was diverted to promoter and promoter linked entities, bypassing the stated end use, that is purchase of electric cars. And now we look at the payment to Go Auto and EV deliveries. Company ultimately this 829.86 CR taken from these two entities to be used for purchase of electric cars. But if you see, it was not used for that purpose. So much diversion has happened. On analysis of bank statement shows that they transfer around 775 CR to Go Auto, against which they obtained delivery of around 4,704 electric cars only, costing around 567.73 CR. And SEBI, what they did is they taken confirmation from the Go Auto managing director, and as per them, they were not going to deliver any further electric cars because Gensol is liable to pay further 50 CR to Go Auto as per that claim. And SEBI, when analyzed, it's found that around 207.27 CR was transferred over and above the cost price for this 4,704 EVs. So that gone to multiple group companies. The shortfall prima facie appears to be diversion of funds by Gensol to connected entities, which requires detailed investigation. So SEBI is conducting an investigation by appointing a forensic auditor. That if you see the order copy, they are telling what so many steps to be taken. Within 6 months, this auditor should give the report, and the final report will be provided. This is an interim report. So wait 1 minute. So this is a broad idea of how the loans taken by Gensol is being diverted for purpose which is not intended for the loan. The purpose of this loan for giving electric cars. Take electric cars, and ultimately this electric cars to be used for Blue Smart. But ultimately this is purely diverted. So there is clear diversion of funds. SEBI has noted this, and they are given an interim order saying that the promoters are not allowed to trade in stock market, and multiple orders are given. So what is the order that is being given, and what are the other findings of SEBI, which these things I will cover in next video. So this is all this content which I have informed is purely taken from SEBI order. I hope this video is useful to you all. Thank you very much.